All right, guys, welcome back to the channel. Obviously, this is a short fuse live stream on a Monday. Honestly, I wouldn't be surprised if half the country wasn't home tonight anyway. I hope you're as fortunate as I am home as well, stocked up on plenty of toilet paper. Interesting times right now. It's amazing how things can change on a dime. To be honest with you, is seemingly in the beginning of January, it was amazing how we were almost gloating as to how much of a superpower we were in the United States, and it seemed like there was absolutely no stopping the stock market. I found that extremely ironic. If you caught my demeanor, certainly in the months leading up to this current volatility that we've had, I don't think anybody could have foresaw this volatile of a move downturn. Obviously, today being one of the most volatile days, I actually forced myself as a student of the stock market to sit and enjoy the news. As the market closed off 3,000 points. Very interesting dialogue today. Sold off an additional 1,000 points after the task force led by the POTUS and POTUS gave their address actually to the nation with regard to the status of where we are with regard to the current systemic problem that is permeating through global markets, I might add, and permeating so deep into supply chains and actually probably kicking down the can, which got my attention to July or August of this year. Interestingly enough, markets are trying to find their footing right now. I often said through the life of the channel that I would probably provide my best value to my subscriber base during times like this. I really would, and that still continues to be my steadfast promise to everybody for sure. I just find it interesting, the pulse of the market. I had somewhat of a difficult time really understanding how to really enjoy the crest of the final months of the bull market. Most of the folks know that since I've been putting out the channel, I've been really trying to key in on a lot of fundamental and psychological pieces to investing in quality in your portfolio, how to seek out all strategic edges that exist out there in the stock market. And if you followed my lead, make no mistake, you are absolutely enjoying those benefits, as hard as it may be or as hard as it may seem right now. I've actually noticed an uptick in financial planner commercials that come on TV. You'll notice that now here for the first time in about 13 years, just concluding a bull market, you'll see these folks coming out of the woodworks, as well as some of my loyal subscribers, actually, that I think just hang out, to be honest with you, and wait for these few months as few and far between, but as predictable as they are. They love to come on to the Independent Investor channel, as I would presume that they probably are frequent guests on a lot of different channels, to offer their idea of where they think the stock market is going to go. I would be hard pressed to presume and look into my crystal ball and tell you guys where it is I think the stock market is going to go from here. I've been very successful in the stock market, not engaging in that line of dialogue. And I think if there's any takeaway for anybody that wants to hear my perspective on the stock market, I will keep beating my drum because people need to hear this. And if you wonder why I'm being a little bit more aggressive on offering alert Monday live streams, etc., I'm glad to do it. It's the least that I can do. I do enjoy the stock market discussion. But it goes a little bit further than that for me. I can be rest assured I'm completely fine. But I do feel that there's probably a lot of people who have been turned on to the market for sure over the last 3 or 4 years, as it is easy to do and probably have a lot of hard dollars invested in their portfolio right now. What I mean by that is getting off the launching pad for a lot of new investors is one of the most difficult things that you can do. What I mean by that is if you've saved up $1,000 from, let's say, your income, or you've saved up $5,000 in your income, or you've saved up $10,000, those are hard dollars, and you haven't had the chance for some level of justification to set in as to why you do this. Okay. I've been provided such justification over the years. There's no way that somebody of my financial stature should be working with the capital that I am. The question is why? Why am I able to enjoy that position? Now, certainly in the short term, it's not necessarily that enjoyable to watch your portfolio, which is subject to this volatility and downturn in the short term. It's not fun. Okay, it's not fun at all. All right. I think there is a fine line that you really need to have in perspective. And when you're observing what's going on in the market, or if you're deploying the opportunity not to pay too much attention to the volatility in the market, whatever you've got to do to keep your mind off of making sense, which you're probably going to have a hard time to do on what's really going on now in the market. I do have some hypothesis. Remember what I told you about the arrogance in January of 2020, coming off a fairly good Christmas season. That arrogance was probably had no place in the market at all. And now it's actually uncovering some real weaknesses, in my opinion, with regard to global supply chains and how reliant we are upon other nations. And I think each and every one of us has a decision to make with regard to what direction we want to take this country when it comes right down to your voice. Fortunately for me, I tend to put pressure where I think pressure makes a difference. And for me, the Independent Investor Channel is just that. For a lot of people, it is their power of the vote. It certainly is. But I had no idea with regard to our reliance on certain foreign markets. And I think hopefully there may be some good that comes out of this if we can shore that stuff up and our dependence on other countries, at least for some of the critical items that need to be had and can basically be used as leverage now during times of vulnerability, right? During times of strength, it's very difficult for other countries to use that level of leverage. I think that's something that we really just need to take a hard look at. And if there's room for improvement, I would say that there's work to be done there. Now, who am I, right? I'm just a little fella. Okay. We don't have a lot to say, right? We're completely disconnected. And if anybody feels somewhat of the same as me, I welcome you to the team. Honestly, I think there's some level of disconnect and perspective on things like this. And I think people will be affected in different ways by this. I'm, again, not one to freak out and rush to the store and buy every loaf of bread on the shelf. I'm just not one of those fellas. I don't think like that. But I do really feel like there's some level of disconnect in that, if we had some of the companies that are represented in each one of our portfolios have a bad quarter or have a bad, year, that would absolutely be reflected in the portfolios. But to see the portfolios suffer so quickly without really any time to react is really one of those opportunities to sit back. And I always say that the market is a very, very humbling place. And if nothing else, I think I pop on here to the live stream to really emphasize the point of what it means to be an investor, where you are currently, where you are with your exposure. And yes, if you're brave enough to look where in fact you are with your current posture, with your current time horizon, with your current allocation schedule, right? How much you're actually contributing to this. You should be more aggressive on your funding schedule now than you were at market highs, right? These are all very, very simple philosophies to abide by. And I really try to keep the conversation on the realism side of the fence instead of the disco ball party time. I'm throwing hundreds of thousands of dollars at this stock market. I think calm heads will prevail through this. This is not my first rodeo. So if you can take any level of comfort in knowing that I do believe that this too shall pass. This has been one of the most violent sessions that I've went through today specifically. But if nothing else, I was kind of in awe in the power of how quickly the market could go down. We're about 30 points. I went ahead and put the resistance or the technical low on the S&P 500 tracking back to December of 2018. We're about 30 points away from that low right there. So interesting times. Certainly, will we hit that? I don't know. I was a little bit disappointed that I couldn't make any strategic buying in the market today, down 3,000 points, and that last 1,000 was a gift, to be honest with you. If you guys paid particular attention, that it wasn't until the task force came out and started to offer their comments that the market did go ahead and drift further into negative territory. And go ahead and shave that additional 1,000 points off of the Dow. Why not? So, but anyway, but it's really good to be with everybody. Certainly, we come on and we offer a perspective on the stock market, this being what is to me a small aspect of my life. It certainly does feed the financial piece to my life. These are certainly times where it's worthwhile to take a step back and say, are you on track? Do you have the level of exposure that you need in the market to meet your long-term goals? I don't know what the stock market is going to do over the next 2 months. I don't know, but I'm going off of some level of historical precedence and setting up my program to win over the long term. And I'm prepared to lose over the long term if, in fact, I'm true to myself and I'm true to the techniques that I deploy in the stock market to make sure that I'm giving myself the very best chance. Okay. I've got Mr. Bob in the group here who has offered his comments here. And the irony in that whole thing, I think there's a lot of people right now that certainly are falling victim to panic selling. But here's the thing. I would question each and every one of you guys if panic selling is something that you're able to justify. I would like to understand why. I'd like to understand why dumping all stock right now is in your financial best interest. Okay, let me play a little bit. Were you overexposed to the stock market to begin with? What I consider this to be is controlling scale in the market. Did you underestimate the power of the stock market before you invested 1 red cent in the stock market? Perhaps, right? Did you go after quality or did you go after hype? Did you tune into a YouTube channel that seemingly wanted to go after every single growth name out there on the landscape and sell you on this dream that Tesla was going to $5,000 a share? Perhaps not. Did you seek out a higher than average dividend yield because you thought that you had found something that nobody else in the stock market had found? Did you think broadly that you were going to be that one investor that actually got a basket of stocks together that actually outperformed the market for what you said was your long-term goal, i.e. 10, 20, maybe 30 years? I don't know. These are all interesting questions that you really need to ask yourself, and I can continue. All right? Do you have your debt under control? All right. Have you been on the sideline over the last 10, 15 years? Did you sell out in 2009? How's your employment? Is your employment solid? What would happen to you if you had to undergo a health issue? How solid is that? How's your home condition? I offer these rhetorical questions to make you think and have some level of perspective, because it's really awesome. It takes two sides of the conversation to make a conversation. And I don't want to be that channel creator that comes on to YouTube and expects that my way is going to be the way that everybody expects to invest without any type of retort. And I do welcome that. I absolutely do. But here's the thing. You really have to be fair with your criticism of investing as a whole, but perhaps maybe being constructively critical of yourself and your capability. Now, remember, we offer investment strategies that are okay for people who have very little to no knowledge in the market. Passive investing strategy works really, really well for that. Okay. That's proven over time with the year-over-year strategy and return over buying broader indexes. If you want to buy a dividend ETF or index fund, you can do that to get yourself a little bit more of a dividend exposure in the market. That's fine. If you want to try your hand, or you already have an existing 401k, an existing investing account, you've got a good cash buffer, and you're looking to add that extra layer of investing into your program. Maybe you want to allocate a little bit to some single stock investing with some dividend growth potential, right? These are all super, super good options. All right. But the strategic advantage that we offer through the independent investor channel has really nothing to do with the individual products that make up your account. It is the account itself. Okay. It's the ability to take those hard dollars and put them into that retirement account, not only to tax protect them into the future. And if you guys are going to be 59 and a half tomorrow, okay, look at the level of scale that you have. If you're 10 years away from being 59 and a half, wonderful. If you're like me and you've got 20 years down the line and know for a fact that you're really not going to need that money anyway, then what does the last couple weeks really mean when you look at it from that perspective? Has it been volatile? Yes. Has it been unpredictable? Yes. Would you have been able to call a bottom? No. Just being honest. Okay. I took 8 injections into the market over the last few weeks. I'm happy to do so. In retrospect, I don't say what if, how this, why this, whoop-de-doo. I have a very short memory. I had some cash on the side, about 40% before this downturn. On the onset of the downturn, I started to incrementally buy every 1,000-point dip that we had. Here we are, flirting with going below 20,000 on the Dow Jones Industrial Average, bumping up against those December 2018 lows. Here we are, guys. Okay, we're down, I think, off 30%. You guys didn't have a chance to check the statistics down anyway, but I think we're off about 30 right now, I believe, maybe a little bit more. Interesting enough. Will we enter into a recession? I still contend no. I'm definitely entitled to my opinion. And here's some of the reasons why. We can't quantify the effect of the supply stream, although I do believe it will be affected, the extent of that effect. Okay. Now, the Federal Reserve is pumping stimulus into this market right now, that of which I actually don't necessarily agree with. I don't like it very much. I don't necessarily believe that the fiscal stimulus that's being pumped into the market really is going to help solve this problem that we have now in the world. There is some positive news actually coming out of the point of origin, to be honest with you, out of China, which is really interesting. And I don't know if that will be a model for the U.S. I don't know. I'm not a scientist and I'm not a doctor. So I can't really perceive how the effects of this are going to creep into global markets. What I can say is I've seen different levels of stimulus and the willingness of those different entities, the Federal Reserve specifically, and our financial system to act. The difference between now and 2008, 2009 downturn is that our financial institutions are much stronger. You guys have to understand the audit scrutiny that those companies went through after the mortgage-backed security crisis, after the last recession that we had during the financial crisis. And a lot of those banks came out of it a lot stronger. Okay. You notice that Bank of America didn't go down to $5 a share this time. Is it going to go to $5 a share? I don't think so. When I look at companies like Goldman Sachs off here at $165 a share, I'm chomping at the bit a little bit. It's very hard to pull the trigger on financials here. Morgan Stanley just came off of a phenomenal quarter. Bank of America coming to my mind. Wells Fargo at $28 is laughable. Okay. I'm just giving you a perspective from my lens when I look over these. Berkshire Hathaway off as much as it is. Boeing right here off as much as it is. These may be presenting multi-generational buys here, which don't normally offer themselves or render themselves opportunities like this. And certainly argued to be had in the short term. My perspective on a company like Boeing is absolutely long term in nature. So, you can look at it from a lot of different perspectives, and it will really be interesting to see how energy fares here over the next few months. I think there's really been some amazing damage done to the stock market, that of which is probably not going to render any type of V recovery in the market. So it'll be interesting to be had. I do believe that July or August may be a realistic time frame. Whether or not the stock market can continue on its precipitous drop down will be interesting. I don't see that happening. With regard to the cross current now, again, if this was a financial type of crisis, I would be a little bit more leery on my opinion about where this thing would need to go. But the real effect and the bottom line is going to be the degree of impact that this current problem has for stocks going forward. So we'll see. Over time, they will recover. And the whole idea, I think, is to look at your portfolio through the lens of understanding a few things about short-term observations. Okay. Short-term observations should be made through this lens and this lens only. When you were looking to build those shares from the very first stock purchase, whether or not there's hard dollars or there's some capital appreciation there, whether or not you've invested for 1 year, 10 years, 15, 20, 25 plus years, okay, you really, really need to give yourself a fair shot at looking through it through a longer term lens and not get caught up in the short term observations. Now, most people, their eyes want to go like this. Okay, they're moving to the right. Don't do that. Move to the left. You want to know what's in the left column? In the left column is your share column, okay? And I want to congratulate. I do this all the time. See, I told you the value would be rendered on the channel because I think a little different than most people. I really do. Perhaps maybe it's my time in my current profession that has hardened my mind, maybe. I do attribute a lot of my hardened mind to my previous life as a commercial fisherman in Alaska and out of Los Angeles. I spent 9 months on a boat, and I learned to appreciate a lot of different things, especially basic utilities. All right. Water. When was the last time you went and took a shower and thought about the consumption rate of that shower and the consequences of that shower? Okay. Most people have not, right? They just get in and they turn on the shower and they take their shower for however long. Maybe they consume a little water. Maybe they're out in 5 minutes. Okay. When was the last time you thought about flipping the switch and thought about the energy that you were generating by doing so? Why do I run you through this exercise? It's because on a boat, every single one of those things are finite in nature. Okay. The electrical switch, the appliance that you plug into the wall is coming from generating systems that you're generating on board the vessel. Okay. When you put that water over your head to take a sea shower, it's coming from a finite potable water tank that's held in the aft end of the vessel. Okay. So the reason why I run you through this exercise is I sometimes think about, I've seen some of the empty shelves on social media, and it's almost like if Americans specifically can't eat every 20 minutes, we think that it's a national catastrophe. And I don't know if things have gotten worse over time because we get into this habit-forming behavior and we expect certain things. We expect to have an Arby's, a Dunkin' Donut, a McDonald's, and a Cracker Barrel all on the same corner for us to choose from. And lo and behold, if somebody's going to take that God-given right away from me, okay, it's a reason to panic. And it's a reason to go to Walmart. And even though I may not need 8 loaves of bread, by God, I'm going to take that 8 loaves of bread off the shelf. Why do I run you through this exercise? I run you through this exercise so that you can understand what it takes to be a successful investor and just a successful person. Okay. I've said many, many times on the history of this channel that so many people justify a ton of different things in this life that will depreciate and turn into dust over the course of their life. Autos is a perfect example of that. I can't tell you how many $50,000, $60,000, $70,000 trucks are parked right now out in my apartment complex right now to this day. Now, they would look at the stock market and say, this is absolutely insane. I don't see why your eyes move left and why your eyes can't move right. I don't get it, right? You see all that glaring in your portfolio. Why don't you just sell everything and run for the hill and buy a big pile of gold for yourself? Yes, that is an option. That is an option. I just find it interesting, and I don't know, maybe I'm the one that's screwed up. I really don't know. But where is it that you find value in life? Where is it that you find value? Okay. Is it in that car that you go and trade in every 3 or 4 years, right? Because you pay off the old one and then automatically go and rush into a new one, where perhaps maybe you could have just kept that old car and taken that $300-400 and started yourself an investing program for yourself. See, the justifications that people go through and the deliberations on what purchases they make in life intrigue me. It's intriguing. And that's why I've said many, many times, this topic in and of itself is infinite on the Independent Investor channel, because people are strange. It was strange. And perhaps maybe I'm just more strange enough to maybe observe some of those things that I feel are crazy and that aren't going to render you any level of long-term success. Okay. We know that that $75,000 jacked up truck, it looks really awesome and it gets like 9 miles to the gallon. Someday is going to be worth like 10,000. Okay. So you've just basically pulverized $60,000 all to drive around a depreciating asset and to be happy doing so, right? You're happy the entire way down. At no point of earning that owning that $75,000 asset did you ever stop to think that you're probably losing $5,000 to $10,000 a year by owning that particular vehicle. It's okay, right? It's the status quo. It's socially acceptable. It's a symbol of success in this country, to have the biggest and baddest car, to drive around. So what? So you can roll down the window and show everybody how wealthy you are. I think what you really need to understand is that the definition of true wealth, society doesn't get to define that for you. Okay. Want to know why? Because they're wrong most of the time. Okay. It's amazing to me where we put value. It's amazing to me how there's not more positive discussion going on around people who choose to invest for their financial future. And no matter what, we don't try to sell fear to people. But there's a lot of money that's to be had through the social media networks and as well on our network televisions, because I said that when this volatility was going to kick up, that the networks would do a 180 on you. And did you happen to notice when that happened? You wouldn't, because it happens so quick. But as long as the money machine can keep going, they're going to keep selling you on something. And the irony in it is where when the dust settles, is this going to leave you in your portfolio? Where's this going to leave you? Okay. In the short term, is it going to leave you down a little bit? I don't know. It depends on if you're looking right or looking left. Okay. I would expect that each and every one of my subscribers who tune into my message free of charge, I might add, and enjoy the techniques that I actually deploy every single day. These come second nature to me. I offer them to you guys because at the end of the day, I do not want to see somebody who's made their way to the benefits of the stock market over the long term only to cut the tree down before it has the chance to bear fruit. All right. So I really appreciate you guys. Again, I hope the toilet paper's all stocked up. I'm going to cruise up here. I do have some channel creators in the group here, and I know everybody's probably busy on a Monday. I'll apologize up front. However, if you are tuning into this after the live stream, I do fully understand that this was short fused, but as you could tell, I probably just gave a half-hour opening monologue because I have a lot on my mind, because much of what I see going on right now is stuff that makes me say, So that's just my feeling on the issue. I've got Investing Sensei here who's Andrew dollar cost averaging down, right? So that's a good chunk out of what I'm doing. I just saw Matt Money just rock into the group here. That's freaking awesome. I will throw an invite in here. I do plan to go a little bit later tonight, as I've been basically provided my quarantine orders to stay home and ride this thing out. I'm not sure why, but that's what we're going to do. We're going to stay positive, and we're going to spend some quality time with the family playing the game of life. That's what we're going to do. So I think I just dropped an invite. I sure did. So if you guys want to come on and kick volatility around with me, I know Matt Money has been actually adding to this market. I wish I could bring myself up to speed as to actually how much. It's really difficult to quantify dumping money into these share bases. But I think with the aggressive moves that Matt's making, he's probably at least setting himself up for a $750,000 move, maybe even flirting with $1 million. All we need is a little cooperation and swing back from the market, which we'll get. will get. Okay. This is the type of investor that will methodically step into the market. I'm not going to speak for Matt. I would look at the portfolio and say, yeah, okay, yep, I understand. I'm looking right, Ryan. I'm looking right. I'm looking right. But he has the maturity at 28 years old to look left as well and say, you know what? There's room to be had on this side of the house. I'm going to build this up because I believe in these companies. And I know he does. That's just comes with the territory for a disciplined investor. Is Matt selling everything and buying gold? Probably not. Okay. I would just go out on a limb and say probably not. So he says, speak for me. Well, I appreciate it. You know, I just kind of know just the particulars of your program. That's all. And, you know, it's difficult time to go through, honestly, because like I said, your eyes do want to move right and pay attention to where the market is. I typically look at both. How have positions performed? You know, which positions are performing well right now? Kimberly Clark, right? Dave is going to hate me for this, but Clorox is doing well, Dave. So I don't know if you just went ahead and bought back into it, but I was half tempted to actually take a stab at Costco today. Absolutely, Costco, just to pay attention to how some of these great businesses are holding up during this volatility. Interesting enough. I'm doing work right now, kids. I'm doing work. Okay. This is where I work in the trenches. And I would definitely deploy you guys to do the same. If you don't want to look at the portfolio, fine. But at least scour over your watch lists and see what sectors are really taking a bath right now. Never in my life have I seen Halliburton at $6 a share. Never have. Never in my life have I seen Schlumberger at 14, I think probably is what she was at the end of the market today. Wow. I just, these companies are state of the art, man. Number 1 and 2, respectively, for oil service providers, for equipment and technology to the oil companies. So, you know, Exxon and Chevron, the two behemoths, quite frankly, Total Energy from over in Europe, as well as Royal Dutch Shell. It'll be interesting to see what happens. I'm certainly not smart enough to forecast. Neither is the experts, so I don't feel so bad. But what I do is I do pay attention. I do have some real money in each of these names. I'm down a bit, but it'll be interesting to see how energy kind of fares here, because something systemic certainly is going on. The shock that I remember in the oil markets was when the price dropped to dangerously low levels at 25 a barrel. So, you know, it'll be interesting to see what happens here, and enjoy it at the tank. I saw $1.97 when I drove by the gas station on my way home tonight. It's interesting. You know, there's always interesting times right now going on. I've got Minds in Motion. I'll throw her up on the screen here for sure. Awesome to see you this evening. And I'm kind of cruising up here and just hitting all the channel creators. Dave with Hidden Freedom Investing as well, who is being nice, not throwing the tomatoes at me for the Clorox comment. But anyway, I don't know. I didn't check. I've got all good here in the group. That's awesome. I'll probably cruise to the top of the stream and just kind of get an engaging collection of these comments. Certainly, I can keep going. I just want to throw down as much value as I can in this, and we'll earmark it at an hour. I may go a little touch longer tonight. Why? Because I'm feeling it. Okay. I've been looking left most of my day today, and it's been interesting. This was one that I'll remember for a while. I typically remember these, and I would encourage you guys to do the same. This is what I mean when you cannot manufacture this type of activity for yourself. If you are an investor and you made it through and you didn't like it and you were emotionally moved, but you made it, pat yourself on the back, because if you can make it through this, you can probably make it through anything. All right. I've never seen a 3,000 point drop in the market. I could be wrong on that, but I do not think that I am. I think today was it. So certainly it was in order to use one of my very large tools in my tool bag, which is the independent investor channel, through the strength of the subscriber base and through the strength of the channel creators to come on and facilitate a message, my message, okay? Because there's a lot of interesting dialogue going on right now about where it's going, how it's going, what we should do, where we should do, what hoop we should jump through, flaming or not, on YouTube. And it's kind of funny, to be honest with you. Really kind of funny. Spend most of the dialogue talking about things that you cannot forecast. You can't. So why not spend your time wisely and spend your time doing what it is that you're supposed to be doing, researching companies, identifying where in your portfolio you can look for room for improvement. Why not do that? Why not look to see how you can strengthen up or shore up on the budget a little bit more? Why not thinking about creative ways to maybe starting some level of side hustle, right, to help buffer and make sure that the percentage of hard dollars in your portfolio, remember the 1,000, 5, 10,000, 25,000, etc., are supplemented with a few soft dollars. Okay, soft dollars in the portfolio are dividends. Okay, you didn't work hard for the dividend. Let it go, Matt. Okay, you didn't work hard. Okay, dividend is paid to you because you opted to buy a share of stock, right? He would agree with me. Okay, I'm just playing fun, right? I didn't earn my dividends this week either. My VOO just paid an enormous dividend, almost bought me an entire share of the ETF trust, right? VOO. My VYM paid huge dividends. That's one thing cool about owning all the Vanguard stuff, is it pays a whopping dividend all at the same time. So you got to focus on the silver lining a little bit and not get so caught up in all the garbage and all the stuff that's going to get you sidetracked. Honestly, it's as if YouTube really wants you to get caught up in all of the drama. I think for the most part, most of us could probably benefit from shutting the TV the hell off. I don't know. Watch more independent investor channel, man. I don't know. Maybe you'll be stronger for it. I don't have a teleprompter. Okay. I don't have a script. Okay. I don't have any of that. Just talking from the heart. And sometimes I speak from the mind. Okay. And it's all aimed at helping not only me, but offering some level of resiliency to the market. And you are earning said resiliency. If you've made it through the last 3 weeks, it's given you the opportunity to come out of it stronger. And when we come out of this, and we will, I don't want you to forget this. You do not want to forget this. You want to make sure and reflect back on this and understand that your portfolio, as it's recovering, can probably render a little bit of lesson to you. And here's what it is. Remember how you felt when it went down the day that it went down 3,000 points, okay? And if you forget, I'll remind you, okay? I want you to remember, were you solid? Were you steadfast? Did you think about selling everything? Did you think about selling everything and running for the hills? Did you think about selling your entire stock portfolio and then run to the supermarket to buy 10 gallons of Purell and a big, huge 72 pack of toilet paper? Did it make you feel better thinking along those lines? Did you actually do it? I sure as hell hope not. I sure as hell hope not. Because here's the thing. In 2 months, we may still be here in the low 20,000s. I don't know. We may be creeping with 2,000, below 2,000 S&P, flirting with those resistance level at 25.31, the 24.31 that I threw up on the screen there for you guys at the top of the stream. I don't know. But eventually, the market will dole out a humble pie, as it is very, very capable of doing, not only on the downside, but on the upside as well. You think you feel bad now? Try selling everything now and see how well you feel at the end of this year when Christmas time rolls around. Mark my word. I'll remember that we were all joined together on March 16th here when the market was down 3,000 points. So let's just go ahead and put a little earmark and a tag on this particular offering, okay? And as a team of self-directed investors, we're going to remember what we went through in our deliberation and how we can improve upon our program, okay? We're going to take a page out of Matt Money's playbook. We're going to take a page out of Ryan's playbook. How did he strategically buy the market? Now, I ran out of pay dirt. I was at 41%, honestly, guys. I made 8 strategic buy points on the way down. I'll have to go back and review where my entries were and see how I can deploy the one attribute that I was not blessed with in this life, and that is patience, okay? If I'm guilty of anything, it wasn't deploying patience, okay? But I had got into a habit over the 3 years of buying the dip. And it worked really, really well. 300-400 points. I was stepping into the market. You betcha I'm in, right? Maybe selling, maybe holding, didn't matter. I was making money. It didn't matter. And that's a lot of what the silver lining you may get out of being a subscriber to my channel is a lot of the depreciation in the portfolio. Make no mistake. The truth of the matter is those are soft dollars. Okay. Those are soft dollars. Those are capitally appreciated dollars that went up over the course of my investing career. And so, although it is somewhat painful to look at the portfolio when I'm looking right, okay, I always take the time to look left at the share base and make sure that I'm always focusing on building that aspect of the portfolio, right? Just the way Matt's doing, buying into this volatility. I don't know when it's going to end, but the fruits of that labor will absolutely yield themselves very, very clearly. And it's probably a lot sooner than you actually think. It's scary while you're doing it, I guess. I guess if a new investor looked at me and said, Ryan, I can't do that now. This is too much. This is part of kind of what you need to do. The conservative approach now is to hold, and that's a viable investor's move. Man, you're an investor if you're doing that. If you're looking at this and you're like, man, I don't like this, I'm just going to hold true and be an investor. I'm going to hold true this turbulent water and come out the other side. And then I'm going to reassess. Okay. I'm going to reassess. Maybe I was a little bit too overexposed, whatever. Maybe I heard Ryan say 112 times through the catalog of his videos to have some stockpile aside. Maybe he said many, many times that the stock market is humbling in nature, but I didn't want to hear it. He said it. He said it. He really did. I give him credit. He said it, but I didn't want to hear it because the stock market, man, it was going up every day. And I just wanted to believe that I was an investor investing in the greatest time in the history of our world to ever become an investor, and that the stock market could never, ever do me wrong, ever. All right. You'll come out of this stronger. Okay. Having been provided the greatest lesson that I cannot simulate for you. I cannot come on here and paper trade for you. I cannot run you through an independent investor channel course that's going to simulate the big leagues. There is no minor league stock market. Okay. It's all major leagues. And that's some of the toughest part is that when you're 18, 19, 20 years old, and you want to step into the stock market, you don't know squat about it. And you think that your best entry into the market is to start a Robinhood account and join the 10, 11, 12 million people, sheep who have joined Robinhood, and because you think that because they're in it, it's the best thing for you. Okay. It's not your fault. That's the tough part about it, is that you really do need to have some education about it. And it's very, very difficult to understand this side of the market when you're starting out. When you see that a lot of other people are making money, it's exciting. Maybe you have a little bit of expenditures or some discretionary cash on the side and you want to put it to work in the market. I think a lot of people want to believe when they come across an option that option is the very best option in the market. I've already been through this deliberation. I went through 4 brokers, and I can tell you right now, the one I'm with right now is probably not the best in the world. But does it give me the majority of what I demand as a self-directed investor? Yes, it does. Okay. Would Robinhood provide that level of demand that I have on the stock market? No. All right. That's 25 years of experience just telling you I don't understand why it exists. I don't understand. Now, M1 Finance, I put in a little different category. I really, really do, because it does offer retirement accounts, which is a large chunk of what I expect new investors to at least acknowledge, which is very, very difficult to do when you're 18, 19, 20, 21, right? You own the world, okay? You own the world. This Robinhood is phenomenal. You're going to become a day trader, and you're not even going to need to go to college because you have the power of the stock market in your hand and you can trade for free. Have fun with that tax bill when you get it. Okay. That's reality. That's when reality punches you upside the head and says, hey, how are you? Nice to meet you. I'm the world. Welcome to me. All right. Good stuff. I'm going to cruise up here to the top. There's actually just a ton of people in here, man. I give a shout out first and foremost. The first one, financial investor Brent is in here. He's driving home, man. Do not wreck. Okay. I'm being kind of entertaining. I'm a little bit in a zone tonight, which is really what I would like to see myself in this zone most of the time. But it takes a little bit of energy to get me on the left side of my brain. Remember, looking left, not right. Okay. All right, the first crack of good news or vaccine, and it's taking off fast. So I did notice that a little bit. I was intently listening. I was discouraged in most of what I heard. This is encouraging, absolutely. There is a target group, of folks that have immunodeficiency disorder, whether or not you're 20, 30, 40. So don't get this in your head that just because you're young, you can't get it. You absolutely can get it. The scary part about it is your symptoms may be a heck of a lot less noticeable, and your ability to unknowingly transmit to perhaps maybe somebody older, whether knowingly or unknowingly, right? If you have it and you just say to hell with it, I'm going out in public anyway. People are stupid nowadays, guys. I don't have hardly any faith in anybody. Nobody knows how to freaking wash their hands. You've got to be kidding me. If you need a lesson, let me know. I'll put out a specific YouTube video on washing your hands. It can go a long way. It really can. Social distancing, yeah, that's awesome stuff right there. Shaking hands, one of the dumbest things that we do as a society is shaking hands. It's stupid, okay? Bow to somebody or say hello. It's okay. You don't have to touch somebody else. I'm not going to touch you. It's no problem. Hell, I'm glad to see you. Okay. When this thing passes, maybe even I'll give you a hug. All right. But I'm not going to shake your hands. I don't know where they've been and I don't know where they're going and I don't care. I'm not going to test it out. All right. But that was some positive news I saw come through for sure. I liked it. It was good. Which stocks are down that I can buy? Laugh out loud. I don't know if it's a laughing matter. I'd say buy everything. I think Pfizer here. I think if you got Intel on the dip today, I think Cisco certainly you could step into if you're looking for a little more growth. I do like the big three: Amazon, Google, Facebook. Look good here. JP Morgan Chase, Morgan Stanley, Berkshire Hathaway, Wells Fargo, Disney Company. I don't know if I would step into the airlines or the cruise industry right here. I think the safe play is probably Disney right here. If there's any of those cornerstones, Caterpillar, obviously, 3M. You guys want me to keep going? I will. Kimberly-Clark has held up quite well. Target looks really good. Costco is probably my conviction buy right here. It just has not provided that good of a buying opportunity. Why is that? Because it's a phenomenal company. That's why. Target looks really, really good here. McDonald's has come off of its highs. It looks really good here. These are all companies that I specifically own. I would put number 2 right behind Costco. If you want to throw dice on the craps table, you're welcome to do so. That's in Las Vegas. I was married there. But if you actually want to become an investor in Boeing, I give that blessing to that move right here at 168. Stupid low in Boeing. All right. If you were lucky enough to not get caught up in the downturn, which I have about a 10 share position. If I could double it up, which if I can make it happen, I will. I'll see what happens with Boeing. I'm going to monitor the position. I'm glad to have 10 shares. I'm just as happy to be an investor in it now, but to sit across from you guys and not throw out the opportunity, if you haven't paid attention to our number one airplane manufacturer in the world, Boeing, phenomenal company. And, they're definitely trying to drive some fear into it with the unfunded pensions. That's something that would be worth looking into and doing a little bit deeper research on. Reminds me of General Electric a little bit, reminds me of General Motors a little bit, reminds me of Ford a little bit. I can keep going. I try not to attach my money to those companies that have those obligations long term, because when things are flush, they're really, really good. And when they're bad, you still owe those obligations. It's insane. Second companies I don't typically like to put my money into are those that are attached too tightly with the unions, and all of the aforementioned are. So just something to throw out there. I think financials as a whole are good. Utilities have definitely held up through this. I just recommend holding some utilities no matter what in the portfolio. Real estate has taken a bath. I'm glad to just own the ETF. I don't own any single ETFs. If I were going to buy one right now, I'll throw a controversial pick out there for everybody, and you can throw tomatoes at me if you want, but American Tower REIT will not see these levels for very long. Okay. American Tower REIT. I'll just throw that out there. That's a money-making machine. Okay. What else is out there? I don't know. It'd be interesting to kind of know what you guys are buying. I'm absolutely tapped out right here. I'm done. The hard work has been done. It's been done. Okay. We're off 9,000 points on the Dow. The S&P is 30 points away from what I feel could be resistance. Was the shock of the December 2018 lows worse than this? I don't know. I don't know. I would say based on a collective consensus of what I'm seeing now, I would say yes. I would say that this time now is probably a little bit worse, but the market is significantly different than what it was then, and is definitely being overshadowed right now with what is consuming the news media. Absolutely. And I do believe it's created a cross current in the market. I really do. So we'll see what happens over the short term, and we'll see what happens over the long term. I'll continue to monitor the landscape, but hopefully that laundry list kind of gave you an idea of what you could step into. Quality, right? I really feel like I own a lot of the best quality. You name a quality company, I probably own it. Coca-Cola, Pepsi, right? 3M, Caterpillar, UTX, okay? Some of those really, really good companies. Some of the least paid attention. Look at the retraction in BlackRock. Look at the retraction in Lockheed Martin. Look at some of the defense names. Raytheon is about to merge with United Tech. Northrop Grumman, another good one, sub 300 here. So, to each his own. Every stock pick is not going to fit into any portfolio. But if you were excited to buy stock at 29,438, why are you not excited to buy it right here at 21,933? I don't get it. Okay. I'm actually more excited to do what I did. I bought on the way down. You always wish that you had more. But like I said, looking to build up those positions for the long term, and I'm looking to push to 500,000 as that's my next financial threshold, and I'll do it. There's no doubt in my mind. There's no doubt in my mind. If you think that there's doubt in my mind, look in my eyes. Okay. I carry that same level of ambition for you. I do. I can have all the belief in the world for you that you may not even have for yourself. I believe that if you start with that $1,000, that you'll reach that first $10,000 threshold. I believe that if you had a $10,000 portfolio before this downturn and now it's at 6,500, that you will in fact see that 10,000 blow through it and meet that first $25,000 threshold. I know it to be true. The only thing you have to do is stay the hell out of your own way and not be your own worst enemy. Let the market work and be an investor. Okay. Don't be a pretender, be an investor, okay? You'll be better for it. Trust me. All right. It says, good evening, Ryan and all. Having a great evening. It's fabulous. I'll log in tomorrow over a cup of coffee and check my email, and we'll go from there. It ought to be an interesting couple weeks. I've never been told that I need to kind of stay in my house. That's interesting. I don't know. Not really a homebody. Am I allowed to run? Am I allowed to go run on the street? I hope so. Jeez Louise. I'll be a rat in a cave if I can't. So, hey, about to start driving, so won't be chatting until I get home. Laugh out loud. I agree. Thank you, Brett. Keep your eyes on the road, man. You got a family to take care of. Dollar cost averaging, whenever it goes down in a day, is my plan for sure. And like I said, I kind of got lulled into not knowing that there was going to be multiple days of down, 4 figures every day. I would have deployed a little bit more patience. And I think for me, that's probably the lesson learned. Good on me for coming on to YouTube and trying to identify, my deficiencies rather than my strengths and yada, yada. I dropped 100 grand in Carnival Cruise Line right here. Good. I hope that works. I'm not really sure I understand anybody in nature who would do that right here. But I hope it works for you. I really do. I hope it works for you. I hope you can make up for all of those losses in your investing career that you've had. One of these days, you'll get back to zero. Good luck. All right. Good stuff. Mr. Weber says the DCA at its best. Yeah, for sure. Strategic buying. I think if you DCA this market, like I'm a little frustrated in my DCA right now because it's not aggressive enough. Like I wanted to increase my my monthly contribution to 100% and just live off of my savings, pull back on my expenditures and just live on my savings. But that's all right. We're doing what we can do. I invest 10%. One out of every $10 that I make out of my salary goes into my 401k like program. It's the TSP. A lot of you guys may not be familiar with that. But that's what I do. And we looked at it and we were like, you know what, let's just hold true on that program. We're not going to throttle up, but we're going to be proud of what we do because we work very hard for our money. And that's just what we felt comfortable staying the course on. For the other accounts, the DCA amount stayed the same. I was really hoping to take maybe a double up in the Spider portfolio, which, it's on the table, baby. It's on the table. Just double the thing up, 2,500, double the thing up to 5,000 and have that thing doubled up. The aggressive portfolio was half tempted to take a $5,000 bill and dump it on that. Just working some discipline. That's all. We'll let things shake out. And as I enjoy that aggressive portfolio when it's up, I also enjoy the fact that I really didn't invest a whole heck of a lot out of a lot of quality growth names that I wanted exposure to. And I'm rendering that plan through my scale. What I mean by that is it really hasn't suffered a whole lot of damage. In other words, if I had taken all of my Roth IRA and just dumped it into Google, Amazon, Facebook, and Uber and Tesla and Netflix and Nvidia, I'd probably be down huge right now. I didn't want those aggressive swings in my Roth IRA. I wanted to become an investor in those companies long-term using scale. That's what I did. And relatively speaking, I'm satisfied with where it's at right now, down $300, I think. I was up 1,200. Now it's down 300. So a $1,500 swing. I can live with that. Okay. All right. Marie's in the group again. Awesome. Great to see you. Thank you so much for coming on and supporting this rant that I'm on a Monday. Really appreciate it. Trust me, it's aimed at empowering you guys. It really is. I really do feel that way. So 40% cash and ready to jump in with half. I think that's a prudent move. Certainly you're talking to the guy with no patience, right? So, you definitely don't want to look back on this opportunity and say, I did nothing, maybe you do. I don't know. Maybe selling out of everything is the right way to go. Maybe you've deliberated over this and you just want to come onto a YouTube channel and have them sit across from you and say, sell it all, it's done, man. It's going to zero, man. I just don't think that way, man. I can't do that. But I think that's smart. 40% is a good position. If you've been patient this whole time, good on you. Very, very, very sound. And I appreciate you sharing that, because there's kind of a takeaway from this comment, and that is the discipline that would have been deployed. I don't have that level of discipline to wait it out. I actually underestimated this, and that's my admittance, I guess, to the group, is that I was a little premature on my buys. That's all. So no big deal. Over time, they'll all pan out in the end anyway, right? So Eric Weber's in the group. I have some cash stashed as well. Always good to have a backup plan. I don't know, man. It just feels good. It feels like the right thing to do. And so I took a lot of heat, man, when I was declaring what it is that I do. And hell, I'd never give anybody else heat for doing what they do. I just don't think like that. For the majority of my program, I'm interested in what works and what I can work on. I typically don't focus on what doesn't work. And for me, keeping some cash on the side really makes a lot of sense to me. And I don't know, maybe it was because I was cut pretty deep when I was about 18 years old. I've told the story many, many times, had about 10,000 in mutual funds and not two nickels to rub together. I was overexposed to the market and had no idea. I had my head up my backside. I'll never do that again, ever. Right. So every now and then you get small injects from life, whether it be through a tax return, etc., bonus at work, whatever. I don't get bonuses, but maybe you do. I don't know. Maybe you sell something on eBay, right? Maybe you sell a used car, something. I don't know. And you get a little inject of cash. I think it's nice to always keep that repository of cash on the side. And, and I've still got it. I'm sitting on about 100,000 right here. I don't know. I think it shows some extreme discipline to my program and how much I value that pinnacle of my overall portfolio, that I'm not jumping to invest. I was 2 shakes away, honestly, with consult with my other half in taking 25 right here and starting some interesting stock positions with the brokerage account. But that's still in cash as well as the savings amount. It hasn't gone anywhere. But the Roths, I will report to you right now, are maxed right here. 21,000 men. We're all in the Roths. We're totally invested. None of this 2080 crap. I'm in right here. Time to buckle down and time to become an investor in your quality. Okay. This is kind of what separates the pretenders from the investors. Okay. Your ability to use good quality companies is not magic. Okay. I'm not the first one in the world to discover that Apple Computers is a good investment. I'm not the first one. Okay. So we're using these good investments to re-enter as a participant. Okay. Re-enter at a lower stock price. A couple of these stocks have really performed well. Procter & Gamble, Kimberly-Clark, to name a couple. I know Gen X Dividend Investor is big on Colgate Palmolive. I'm not necessarily one of them, but certainly if you wanted a stab at some of those stocks that he covers, Realty Income with the REITs getting kind of beat up a little bit. I'm not an investor in but certainly, and Leggett and Platt is another one that he likes to invest in the industrials. Any of these are going to be drugged down with the market, right? Where they were in favor in January, they've certainly been out of favor into February, into March. Okay. It doesn't matter how quality you are, you have been drugged down. Okay. Very, very few. General Electric's at 6.5, just saying. So yeah, I'm really, really taking my time, and I'm really, really continuing to observe and be patient outside the Roth, again, because there's really one of those very large fundamental rules that I'd like to kind of abide by. And that is really to do everything I can do to maximize my tax protected accounts. I just really think that that's in line with the type of investor that I want to be. I've prided myself on my ability to, over time, contribute to that diligently and build that up over time. And I just think when I hit 59 and I reflect back over my life, it's going to be one of those things that I'm very proud of, that I have the ability maybe to skim some off the top. I made a comment, and about a month and a half ago, I guess, in a live stream that if I was working with a large portfolio at that time, I would be starting some savings accounts, FDIC insured, with $249,999 in each of those accounts, probably 2 or 3 maybe, and then keeping the remaining exposed to the market to continue to work. Boy, oh boy, wouldn't that move have worked out? I know there's some folks who have hit me up and thanked me, and I was like, for what? And it was like, well, you came out with that video. If you have over 500,000, I've done a good job of preparing. If people were really willing to listen, for folks that maybe would have been 40s, 50s, 60s, 70s, to look at where they were when the market was at its current high and maybe look at it with a different lens and say, hey, at least look at your exposure, at least. Okay. Make sure that you're satisfied with the current risk profile of your portfolio and make sure that it is in line with your risk tolerance as an investor. Make sure. Look at it now while things are calm, because I can tell you what, you do not want to be going through that deliberation now. Okay. You don't. You have no other choice right now but to hold and trust that we're going to do the right thing, and trust that these good companies that you have become a participant in and believed in then will make you a believer on the backside. Okay. That's what being an investor is all about. And we'll see, because there's a lot of doubt right now. They're chipping away at every good company out there that they've beefed up over the last few years that can do no wrong. I've never seen Apple really so beloved, and usually Apple endures the most scrutiny because it is the most widely held stock in the market. But I tell you what, all the knives come out when this type of stuff goes on, and it's just interesting to watch the difference in tone. Yeah, it's just interesting to me, man. There must be a lot of money to be made by fear mongering for people, I guess. I don't know. And that's not to downplay what's going on right now. It's just taking an objective look on what in the hell is going on. We have 70 people that have passed away. That's it. I'd like to know how many people passed away in this country today from natural causes. Okay? Look it up. All right? I'm not trying to downplay anything, but please have a little perspective on this deal, please. Okay? All right. Let's cruise on down. I got the thumbs up here. A thumbs up to the live. Everyone, please and thank you. I will take a thumbs up. I don't know. My income is actually going down on YouTube, so it's awesome. So I'm actually doing this, fighting the system with a reduced income. I put out message through to the subscriber base when and how and in the manner that I want. I don't worry too much about making the algorithm happy. All right. I spend most of my time trying to keep my wife and my children happy. Okay. I don't work for Google. Okay. I don't. And if they were ever interested in understanding my perspective on how I look at this YouTube opportunity, they're more than welcome to come on the channel and hear me rant about how I will never, ever sell out to that. And very, very interesting. Very interesting. I do have a pretty good reception from the ad folks. So I do have pretty good ad placement. But again, I will not sell out. Won't do it. Okay. I sit down, I throw down when I want and how I want. And that's how it's going to continue. And watch. If I ever get out a check, I've had a few people try to call me out as if I'm changing because the money over YouTube is changing me. Trust me, guys, over 410 videos, man, I'm not getting rich on YouTube. I'm not. Okay. My focus has always been focused on the individual investor. And that I really have a hard time quantifying unless somebody comes back and says, Ryan, thank you. You changed my life. Okay. All right. Then that other stuff seems to kind of go away. And I realize that I'm making the impact that I'm aiming to make. All right. Good stuff. We got KHC, ketchup, mustard, etc. flying off the shelf today. Maybe Kraft Heinz food will go up. Thank you, Eric. I appreciate that. Just like Clorox for Dave, Kraft Heinz food is my stick in the side. So I appreciate that. I don't know if I can go much lower, but we'll see. I don't know. I believe in the company. I believe in the product. I just think the moat that KFC has, imagine going into Red Robin and seeing a generic brand of ketchup at your table. Hell, I'd be like, what the freak? Go get me some Heinz, man. What the freak is going on here, Red Robin? Now this is chaos, man. You're messing with my convenience here in the U.S., man. This isn't Red Robin. What the heck is going on? This is an imposter. Go get me the Heinz, man. It's like, come on. Anyway, been a few since I own them. KSC, yeah, for sure. I got Chris Cobian in the group here for sure. He's promoting Lockheed Martin unless he flies those F-18s. That's awesome. Thank you for that. Very cool, very cool. So wife went to Walmart story. This is awesome. I have some wife went to Walmart stories too. Wife went to Walmart today. Still 75% of the shelves still full, but was getting lower. Yeah, like I think people should maybe stay out of the stores in the early morning and allow them to disinfect everything. I wish we could come up with a little better protocol for our elderly folks, and allow them first crack at that stuff. I don't know, man. I just don't understand why people our age are freaking out and being weenies about it. I just think that our modern conveniences, man, we're just spoiled. You want to know the truth. And I'll just say that to me because I love all you guys, and I'll just say it about me. Maybe we're just spoiled. I don't know, but at least I can admit it, Anyway, I got Mr. Dave in the group here. Glad to have the companies I trust most in my portfolio. That's what it's all about, becoming a participant in these good quality companies, man. These are the companies that are going to make it through. That's the whole key. I don't know. With energy, that's about the most close to the lava right now. Those are the ones I'm most worried about. Maybe some of those really good companies going away or being absorbed by some of the larger companies, but mostly blue chip dividend. We just need to wait it out, not sell underwater holdings. Sell underwater holdings? Hell no, man alive. This is the ability. If you're in Vegas and you have a losing hand, you have to turn it into the dealer and they're going to take your money. Okay. Investing is not like that. You can hold your hand until it's a winning hand. That's the beauty of it. Okay. I hate to minimize it that way, but that's the way I see it. That's the beauty of investing. Remember my statistics from last year, guys? 86% of my trades were wins. All right. I'm not selling here in the losses. Forget it. No way. I'll hold them long term. If over the long term we're able to come back and make this portfolio realize the actual share base, that's going to be magic. That's really going to jump up nicely for me, and hopefully I can get each of them up to $250,000. That'll put me at that $500,000 mark. That's what we're aiming for. And hey, I aim high. All right. Indeed, this shall pass, Mr. Eric. And Eric's spitting some knowledge tonight. I love it, man. Awesome. I feed off of that freaking energy. That's a cool thumbnail, man. Pretty cool. I like it. Good stuff. Feeding off energy. Eric Weber's been with me for a long time of the channel, man. Just one of the family. I love it. So Patricia's staying calm, wondering where to invest some cash. I named about 25 areas, I think, and it just kind of depends. Remember, you still want to go through the same deliberation. Why invest? What is your longer term goal for that money? If you had some money already existing and invested and they've come back and they're quality positions, perhaps maybe consider adding a little bit more of a share base to those existing positions. 3M is a perfect example. If you bought it at 200, why wouldn't it be more attractive to buy it here at 138, I believe is what it settled out at today? Boeing, same idea. If you made an ill-timed buy at 250, which would have been seemingly a good buy at the time, what's to keep you from maybe adding a little bit to it? That might be kind of a good move. Caterpillar, some industrial exposure, technology, legacy tech here, IBM at 100, man. This is the lowest I've seen IBM since I've covered it. And I've owned it on and off for the last 4 or 5 years. And it's been a tough go. To make money in IBM has been very, very difficult. But here at $100, this is as low as I've seen it in 5 years. Check the charts, man. I would check the charts on it. But IBM, Legacy, Intel, Cisco, and then of course Apple, Microsoft right here. Microsoft, I mean, at 136, Microsoft is going to be phenomenal long term, probably the number one tech holding, probably a better, up there in quality, of course, with Apple, the two largest, I think. But, if you were going to add the two most important tech companies, they're two of the largest single stock holdings in my respective portfolios. I have them split up right now. All right. I got Pepsi. Pepsi is always good. Bet, Patricia. You bet. Pepsi's good. I do own Coke as well. Both of those names are good. Pfizer is really, really looking good here in healthcare. Johnson and Johnson really hasn't come off that much, which is a sign of strength as far as I'm concerned. You're going to have a bunch of piranhas circling around Johnson and Johnson if it does end up selling off. I just don't think it will. But those good quality companies, Johnson and Johnson, I think has paid a dividend for 100 years, for crying out loud. Check me if I'm wrong, but I don't think I am. One of the very, very few companies that have been around for absolutely ever to reward shareholders. And when this market does turn, it really has held up well. I love the name. Walmart has held up very, very well here. So, some really, really good defensive names. I would definitely throw utilities in there, but you just got to be kind of careful. I don't own single utilities right here. Duke Energy probably being my number one favorite, Duke Energy and utilities. I certainly like Dominion here with some of the stuff that they're doing with some of their special projects. I can't comment on it. You're asking me why or why not. But Dominion, I like. And then a favorite of the group is Southern Company as well. I earn my utilities sector exposure through the utilities ETF, and that was up huge. And over the last couple trading sessions, it's been drugged down significantly. So I typically don't like to seek out my utilities exposure with single stock. So I went ahead and went with the VNQ with Vanguard. It's just a good way. I try to keep that exposure to around 3% in the portfolio, and I live to fight another day. There's 59 stocks in there. I'm totally fine with owning the ETF. It pays 3%. I'm good with that, right? And it's a good safety play when this type of stuff is going on. But a lot of good bargains right now. I just think you need to look at your portfolio and maybe see where you want to maybe add a couple strategic positions. Don't get crazy, but you certainly don't want to not take advantage of this opportunity, or if at least it does recover in 2-3 months, man, you might look at this and be like, what was I thinking? I would have bought Johnson and Johnson at 29,000 on the Dow. Why did I justify myself not picking it up here when the market was down 30%? And that's the type of deliberation you need to go through. Not to say that a specific pick like J&J or Pfizer is right for your portfolio, but certainly I think you could probably find some gaps there that could use some filling. And then have fun filling. That's the fun part about it. Adding a UTX here at 95 a share, yeah, that's fun. Okay, adding a Caterpillar here in the low 100s, it's legit. You're getting very, very good valuation on some of these names here. So very exciting stuffs. Bob says stocks are not a good investment. That's proved true over time. Stocks have never paid an investor. As a matter of fact, 99% of investors who have invested in the stock market and stayed true have won. 99%. You name me a success ratio of any other activity. Perhaps maybe buying that $75,000 truck that I talked about. Perhaps maybe gambling at the casino might be a route for you. Perhaps maybe sitting on big piles of gold might suit your fancy as well. It's just good luck safeguarding that, and good luck not telling anybody. The stock market has been the single greatest wealth creator over the last 6-7 decades. And I really don't think anything's changed within the last 3 weeks with regard to that. Will it suffer in the short term? Yes. I'm not really sure if I'd be so hard pressed to say that if we reevaluate next year on this very comment, down 3,000 on this very day, that I'll be in the same camp with the same opinion. Okay, I'll probably be of a different mindset. The portfolio will probably be approaching my goals just like it has over the previous 25 dips that I've went through in my 25 years of investing. Could this be the one that I'm wrong on? Yes. See, you're missing the point, right? You're missing the point. I don't live my life afraid. I don't. I don't live my life afraid. I use the stock market to be a participant in as many great companies as I want to be a participant in. And the beauty of my program is not that I'm investing in Johnson & Johnson the same way as the next guy or gal out there. I'm investing in a completely different way than they are, because I put on a pedestal the importance of tax protecting those dividends. See, that's the thing. Stocks are not a good investment. Well, why is a dividend payment not a good investment? I don't understand that rationale. Every single time I'm paid a dividend, I'm lowering my cost basis to own those assets. Those assets are working. Every day that I march toward that ex-dividend date, that asset is working for me, whether or not I'm at work earning my paycheck, trading my time for money, or I'm in my bed sleeping. Okay. Why? Because I've thought it important and a priority in my life to build up my assets bucket. Okay. My assets bucket. And with the amount of income that I have, there should be no way that my assets bucket are worth what they're worth, but they are. And the simple reason as to why that is because I've made it a priority and I have not used excuses that the stock market is a bad investment. I just don't buy into that line of thinking. I appreciate the comment. I really do. But the fact of the matter is that's an incorrect statement. It's not correct. And I certainly don't want to mislead any of my subscriber base in me getting on here and talking about why I think the stock market now, all of a sudden, when I've been preaching for the last 3 years on the Independent Investor channel, that it's not so much about the single freaking stock that you own. It's not about that. It's about the nature by which you own it. That is the key. That is the key. You will make so much more over the course of your life by owning assets and being a participant. Yeah, they'll go up, they'll go down, whatever. You're going to be paid dividends, which is going to help. You're going to help stoke that fire by funding it over time. But at the end of the day, and at the end of your life, when you're reflecting back on your life, it's going to be the nature by which you sought your exposure that's going to make all the difference, and not your ability to magically throw darts at a dartboard and pick stock and pick the bottom in Carnival Cruise Line. That is not an investor. That is a pretender. That's just the way of it. All right. We've been going about an hour and a half, guys, man. This is a Monday stream, so I'd like to keep it a little bit shorter, but I would like to absolutely give a shot to most of these folks in here. Jess J says buy puts. You can. I'm not really an insurance guy. I do own term life insurance. That's a good thing because it does suit what it is that it's there for. But I don't buy insurance in my stock portfolio. I don't buy puts. That's just me. That's my choice. Options are a good way to provide some stability in the portfolio. I've succeeded quite well, actually, over the course of my life by not doing that. So got my good friend in here, Jared Odell, who I will meet someday. I absolutely will. He's hanging out down in Texas, and look forward to meeting Jared. I hope all is well, my friend. Very cool. We'll stay solid on our program, and we're going to continue to offer more frequent uploads. Honestly, during the uptick in the stock market, I really didn't see a whole heck of a lot of reason why I needed to get on and bark about how awesome the stock market is. I think my value will be had during times like this, where I can actually talk a little bit to truth about what's really going on. And there are things going on. I get it. Okay. I get it. It's really all about how you react and how you use your mind and your heart, right, to exercise a calm mind. Okay. Calm minds will prevail in this. I guarantee you that. All my income in stocks. Yeah, I'm not quite there. I have different buckets all over the place, actually, all doing different things. I was glad to move out of fixed income personally, and didn't want to have so much outside of the Roth. Perhaps maybe something that I'll look at as the portfolio grows is to make sure and have some safeguarding within the portfolio. But these bond markets really are acting erratic, and I don't really like the way they're acting right here. It's not normal. Something's weird going on. And the bond market is the one that I'm actually really looking at. It's jumping all over the place, and it doesn't typically do this. And makes me think perhaps maybe that my number one threat to the market, which was corporate and capital debt, government debt is becoming more of a focal point, I think. So, but we'll continue to monitor that and see where it goes. So, anyway, Chris is in the group here, but we learn exactly. I believe smart investing is just as Buffett says, the way wealth is transferred from the impatient to the patient. Yeah, well said. And I've lived through this, and you guys will as well. If this is your first one, man, this is quite an anointing for sure. If you are a new investor, but I'd be hard pressed to say that I don't deliver at least as much support as I possibly can for new investors. I think new investors probably do need to hear this from me. And I'm just the guy to deliver. It's no problem. I don't mind doing it on my time. Pretty soon I'll be signed off and you'll be going on about your life. But hopefully it makes you that much more mentally strong and that much more mentally prepared to kind of ride this wave a little bit and be tough. So I've got Mr. Bob in the group here. Thanks for coming on, Bob, on a Monday anyway, not to disturb your Monday. But if you guys haven't hit the thumbs up for me, help me support the Monday live stream. Let's try to get YouTube's attention. Not to say that that's really important to me, but it's kind of like a social experiment at this point, to be honest with you. I kind of want to see if we can actually get their attention at some point. This was a surprise. I'm usually early. That's true. I did. I dropped it on the group, and I'm going to do more of that. It'll just come with the alert tag as well. So just be flexible. When I don't want to put stuff on YouTube, you guys know I don't bother with it. I do it when I want, how I want, and that's the way it's going to be. All right. But you'll get my best effort every single time because I usually have a vein of motivation to sit down and throw down and put some content through that is hopefully aimed at where I want it to be aimed. And that's the receiver of the message, the subscriber that can take the information and use it to their benefit, maybe come out of this thing a little bit stronger. All right. So thousands of small businesses in big trouble, right? So a lot of the stimulus package is aimed at that right now. This is the only small business I've ever owned. I'm fine. I have always been a business mind, and I've never understood the small business risk. I've never understood it. I've never understood going to a bank and drawing up a business plan and taking out $100,000 to open a store, to put products on a shelf and hope that people come through that and buy enough products off the shelf to make enough profit to take care of the overhead that I have to pay. A lot of people successfully do it, and my hat's off to them. Certainly, I would love to see that stimulus boost up the small business owners in this country. I'm not one of them outside of YouTube, but this YouTube thing is hardly freaking work. Okay, this is not a job. This is a side hustle. This is fun for me. This is an opportunity to speak to more listening ears than I could possibly get to in my day-to-day interaction, and that's some real talk right there for sure. Oregon is basically shut down. Yeah, for sure. Why don't you go camping? All right, go camping. All right, those trees aren't going to get you sick. Okay, you'll be fine. Houston is right behind Oregon. Yeah, I know. It's okay. I mean, we'll see how this thing rolls out. I think a couple weeks of hiatus will help people because people are, still going to the bar and still doing their things right now. I think they need to just do what they're supposed to be doing and stay home. I'm well. And I'm doing the socially responsible thing right now, and that's staying home, which may mean that I make more YouTube. I don't know. We'll see. I'm about halfway through. I'm just cruising through here, guys. The Philippines is suspending the stock market. The solution for the U.S. is simple: suspend the market. Yeah, that's not going to happen. That was determined today. They interviewed the president of the New York Stock Exchange. That's not going to happen, and I don't believe that it should. I absolutely do not. This is what investing is all about. Okay, this is not the first time this has happened, and it will not be the last. Okay, the idea is to control your emotion and establish a portfolio that allows you to enter into whatever it is the stock market is going to dole out because you've exercised the right amount of scale. I've come out with videos on this, and if you paid attention, you'd be more the wiser for it for sure. Okay, only allot the amount that you are willing to see depreciate in value. Okay, it's very, very important. Okay, I'm cruising through here. As an electrician, I think about that a lot. That's why I like you, Eric. That's right, man. My brother's an electrician as well. So very cool. I thought you had said that to me before. That's really cool, man. Our trades, plumbers, electricians, and carpenters, man, those are going a long way with me, man. I think the world needs more of that. There's definitely a need for your craft, no doubt about it. But for some reason, everybody wants to just start a YouTube channel and become a multimillionaire, which is a lofty, nice goal. I absolutely support you in your mission if that's what you want to do. Just make sure that you don't forget people when you make your millions. They're not going to spin the market. Marie's agreeing with me. Yeah, I agree. That's just not going to happen. You would have a run on the market if people can't access and have the ability to sell all their stock for a loss. You'd have utter chaos on the market. You notice how the curbs, the circuit breakers went in today, and there was a slight rally after when people have the time to actually think about what they're doing before they hit the sell button. So anyway, I got Alan Kane, a complete stranger, gave us one of his 2 packs of TP at the store today. See, that's what I'm talking about, man. That's what it's freaking about. That's the gift that keeps on giving right there the whole year, Alan. It just depends on how quickly you use it. But that's pretty cool, man. That's the gesture of the day, Alan, right there. I like it, man. Because that toilet paper, man, it's a valued commodity. It really is. It really is. So you're lucky. But it's actually to the left of my phone. I get the point. Yeah, nice. All right. So I guess, oh yeah. What? I saw a guy selling a TP $100 roll, and he had a stack. Oh man, that's terrible. See, I couldn't do that, man. There's not enough pathetic in me to actually consider doing that. Honestly, I would feel bad. Really? Jeez Louise, man. I mean, I would give one away. That's what I would do. Holy smokes, man. That's the measure of a man right there. Would you sell toilet paper when somebody needs it, or would you actually just let them have it? You know? No, that's the military mind. You bet. Now, nothing freaking scares us. Nothing. I guess I'm doubly freaked out. I'm a double freak. You put me on a commercial fishing vessel for as long as I've been, and then you put me in the military. I'm kind of carved out of freaking wood. I'm good. All right, this will pass. I have no doubt about it. He says 7.5 shares of Boeing. Right on, man. 5 shares of Southern Comfort. I like it. And then he probably and half of Verizon, or not Verizon, but Visa there. So Matt's sharing some of the buys he made there. Some incrementally small buys there for a player like Matt. I'm surprised as to why he didn't go with a 50 share block in Boeing. Go big, baby. Go big or go home, Matt. No, I'm just poking fun a little bit. That's awesome. I agree. Those are going to be good. You know, utilities would be the one that I would question a touch. It's just run up a bit. They've come off over the last couple of days. So if you're looking at a short-term inject in a good quality company like Southern, then you're good. But I just think valuations and utilities really ran up before all this crap set in. And, you know, now they're looking to adjust back a little bit with the rest of the crowd. So, well, we'll see what happens. Smoke a big fat cigar in that truck. I love it, man. Yeah, for real. You know, it's Jesus, man. Yeah, kill your pocketbook and kill your lungs at the same time. I stopped. I've had maybe 3 or 4 cigars in my life, and I did enjoy them. That's not a habit that I'm part of. It's not, I don't do it all the time. You give me a nice bourbon, I'm good. I'm satisfied. You give me a nice bourbon, I'm happy. That's my vice. And coffee. I do like coffee. Coffee is a really good vice. This is the little things in life that matter, guys. The little thing, bourbon, coffee, you know, that type of thing. So investing senseis in the group says, nice. I like it, man. Disney is looking good, no doubt about it. So, you know, there's some stuff there. Some of these savvy investors, some of these folks that just subscribe to your channel, by the way, this week, Investing Sensei. So thanks for having me on the channel. That's awesome. I feel like I'm part of the community now, and good luck in building your message. It's awesome. And Hidden Freedom Investing right below says a bonus stream. Yeah. I obviously had a lot on my mind. I basically gave an hour and 40-minute dialogue here. I do apologize for some of the rants, but if you want to play it back and play it in slow motion, you'll probably be able to understand the underlying tone of my message. There's probably some nuggets from tonight. So absolutely. It's all for y'all's benefit, man, for sure. When you invest, you are investing in the American economy. Help all of us. I love it, man. I like it. I like to call it being a participant. I do. I don't typically like the word invest is kind of like, I don't know, like diet and exercise and reveille and that type of thing, muster. I hate those words. I hate them. It's so true. We'll try to get to the end here and make sure y'all be careful out there. The earnings, GDP get reported for sure. Yeah, no, I mean, that's going to drop for sure. So we'll see what happens. I think people are smart. I think investors are smart. I think this country is very resilient. I think the companies that are represented in this country are also very receptive. There's no other country that I would rather invest in. In all honesty, I do joke a little bit about the not going 20 minutes without food and going crazy, and that we are spoiled. We are. That's the freaking truth of it. But make no mistake about it. I love this country. I really do. I'd do anything for it. That's the truth of the matter. And again, as far as my investing protocol, the majority of it is domestically owned, even though I do have worldwide exposure in the portfolio. It's definitely centric in the US for sure. All right. So that was when Matt gave me permission to speak for him. Thank you, Matt. I appreciate it. You're not here. You're probably having your drink right now, enjoying it, man, taking it easy, which is probably what I'm going to do this evening too, my brother. That's what I'm going to do. Think you still be working, saving, investing during this horrible time? Absolutely. Nothing changes, right? You're still going to go to work. You're still going to show and demonstrate the same level of lifestyle that you've always done. And maybe you put a little bit more emphasis in some of the stuff that's really aimed at helping you live a better life. Worrying about the stock market really doesn't fit into that category for sure. So, Zubai says there's a master class on crisis management. It's all about your perspective, man. We got a double black swan. We ought to get out of it a lot wiser, and that's the key. I mean, whatever's doled out in the market for sure, Jamie, that's true. I certainly don't want to see any losses in any portfolio, but I say that tongue in cheek, I know that there's silver lining out there, and I know new investors are going to be like, yeah, right, Ryan, I don't even know why I'm even doing this. This is stupid. This makes no sense. It'll make sense. Remember, at some point, you're going to be reflecting over your life, okay? Are you going to answer to yourself because you chose one of two paths? Either you took a shot or you didn't, okay? Which one do you want to choose? The choice is yours, and the choice is right now. Okay? It's right now. So your ability to reflect back on your life and give yourself credit for taking a freaking shot, all right, that's respectable. Okay? And at the end of the day, your ability to look in the mirror and have as little, if not as few regrets as you possibly can over the course of your life is the key, man. That's what life is. You only get one shot at this deal. You're going to spend your whole day and your whole time criticizing each and everybody out there for their program and what they're trying to do and what they're trying to succeed in life at. Hell no, I'll never be that guy. I could care less. I could really care less. If you believe in what you're doing, man, I'll support you. No doubt about it. The last thing you're going to hear from me is criticism. Why are you trying to do that? Why are you doing that? Why? Because it makes sense for you. And you're looking to, at some point in your life, do what it is that I just explained you should be doing, reflecting back on your life with as little regret as possible. Guys, love you to death. I'll sign off right now. I'll check you on Friday for the live stream, man. Good luck to everybody for the rest of the week, man. Stay strong in your program. I'm going to throw in the Gen X dividend investor right at the end. Is that what's going on? Your next shirt, Jay? Awesome. So very, very cool. A couple other channel creators pop in here at the end for sure. This was an alert live stream here tonight on a Monday, folks. So certainly, I'm glad everybody was able to get their toilet paper from the store and what little bit of food you could find on the shelves, guys. Honestly, keep a level head. All right. The calm will survive through this market for sure. All right. So think of new questions. Make sure that you come and support the Friday live stream. It ought to be interesting. We'll be back on Friday on schedule. I will let some thoughts build up over the next 4 days, and I'll really look forward to addressing the group. And remember, I will reflect back on this day for each and every one of you guys, okay? I don't want you to forget it. I want you to remember it. I want you to reflect back and use it as a silver lining to sharpen your own personal program, okay? Not remember it because I said to remember it, but remember it because I want you to sharpen your own personal program as we evolve as investors, individual investors, as we're looking to seek and build wealth and become a participant in the market in all markets. Guys, been very well to be with you on a Monday night. Guys, take it easy, and I'll check you on Friday evening. Guys, take it easy.